Good morning, my name is Ryan Littlestone from Forex Flow. Today we're going to talk about dollar yen and dollar won, a couple of pairs that we've spoken about previously. What we're seeing today in dollar yen is we're getting a little bit of a break above this 110 handle. This has been a pretty strong level recently and a place that's been good for shorts to lean against. We saw ranges very tight last week and it sort of bounced between sort of 109.60 and this 110 handle. So quite a tight range and really not doing a lot. But this morning it seems to have broken and we've got to move up above 110.20. That's a pretty key area because what it does, it clears this range potentially. And at the moment we're holding above the 110.20 area. And that suggests that we're going to have a push higher. The next level that we've got coming up above is around the 110 sort of 40-50 area, but it's quite a mild area. It's not anything too great. Then we get above that and we're into the 110.80, 90 area, ahead of that 111 area. So what we're looking at here now is if this rally is to continue, we want to see this 110 area hold. So we've got these key levels in the way at the moment, 110.20 as we just spoke about. If we see that level hold as it is, then that gives the impetus for a move further up. If we do go below 20, then we're going to look again to hold this 110.10/15 area. That's sort of the secondary line of support that should be in place now because that was the previous high when we did get above 110. And pretty much 110 is the line in the sand for this rally. If we do get back below there and we hold below there, then this is potentially just another fake out and we maintain the range down towards the 109 area and stick ping-ponging between this 109 and 110 area. So pretty much all to play for in this one. It's been a very slow pair to trade, especially as I say last week. But it can be a pair that just grinds and grinds and grinds. So if you do see a move up, I don't think we're going to see anything sort of fast moving. It's not going to sort of jump from here to 111. So it could be a grinding phase that we see now. So if you are trading it, then lean on the support areas, keep it fairly tight and just go with the move. Once we hit those larger resistance areas, that's the time where you want to look to take some profit off, lock in your stops below that. Trailing stops are probably the best way to play it through this. And then you just got the freedom to play against the high resistance areas. And if they do break, then obviously you squeeze more pips out. If they don't break, then conversely, because you're protecting yourself behind with trailing stops, if we do come all the way back down, then you've locked in some of your profit and it's pretty much a free trade. So from here on out, we're going to watch this break. As I say, 110.20 is the key level. Push up to 110.50 is possible, and 110.80 is getting up towards the sort of the high end of where I expect this rally to go. So the next pair we're going to look at is the dollar won that we spoke about last week briefly. This morning I got my profit target of 680. I was in long from 670 as I explained last week. This has put me pretty much neutral in the pair at the moment. I've been looking at the 7 to 670 range. And while we're playing that out over these trade talks, those are the levels that I'm pretty happy to trade against. So the trade talks are pretty much still ongoing. We've got a potential deadline of March 1st to get this all done, or tariffs kick in again. But we've heard today that even that deadline might get kicked out. It's not set in stone. We could get extensions to talks. The US-China talks are taking part again today with some low-level meetings between officials. That's going to ramp up towards into the end of the month where they take us the steps up to the higher-ranking officials. So this is a risk for this pair here, and while we've not got any good news coming our way or any real news on solutions in this trade war, this dollar won is going to potentially carry on going up. If we start getting to the 6.90 area, then I'm going to start looking at getting into shorts, probably from 6.95 if we get that high, on the same basis that we are likely to get a deal coming out, and therefore that's what we want to trade short into for another run lower, hopefully to the 670 area. So again, all to play for, and one of these pairs that we just keep moving and we just keep watching. So good luck to your trading.